If you've recently gone through bankruptcy, you may be wondering if it's possible to borrow against your home equity. While bankruptcy does create financial challenges, securing a home equity loan afterward is not out of reach. Understanding the options available can help you take steps toward regaining financial stability. Bankruptcy affects your credit score and financial standing, but it doesn't permanently eliminate your ability to obtain a home loan. The type of bankruptcy you filed, Chapter 7 or Chapter 13, will influence how soon you can access home equity and under what terms. With Chapter 7 bankruptcy, your assets may be liquidated to pay off debts. While this reduces your financial burden, it also impacts your credit for up to 10 years. However, if you still own your home and have sufficient equity, you might be eligible for a home equity loan after a required waiting period, often referred to as a seasoning period. Lenders want to see that you've reestablished your credit and financial stability. Chapter 13 bankruptcy involves a structured repayment plan over 3 to 5 years. Successfully completing this plan can make lenders more willing to offer financing. This type of bankruptcy stays on your credit report for up to 7 years, but certain loans may be available even while you're still in Chapter 13. Additionally, the waiting period for accessing home equity after Chapter 13 is generally shorter than it is for Chapter 7. Tapping into your home equity post-bankruptcy is possible through options like cash-out refinancing, home equity loans, and home equity lines of credit, HELOCs. Each option has different requirements and benefits. Cash-out refinancing involves taking out a larger first mortgage to replace your existing one. Home equity loans are typically fixed-rate second mortgages, while HELOCs offer a variable-rate revolving line of credit. Lenders generally require a minimum equity cushion. For cash-out refinancing, a 20% equity cushion is standard. For home equity loans and HELOCs, the required cushion can be as low as 5%, but these options often come with higher interest rates. The waiting period before securing a home equity loan varies based on the type of bankruptcy and the loan you're pursuing. If you've completed Chapter 7, expect to wait at least 2 years before qualifying for an FHA cash-out mortgage and at least 4 years for a home equity loan or HELOC. For Chapter 13, the waiting period can be as short as 1 year for an FHA cash-out refinance and at least 2 years for other equity-based loans. Using home equity after bankruptcy has benefits and risks. On the positive side, these loans often come with lower interest rates than personal loans and credit cards, higher borrowing limits, and potential tax deductions on interest paid for home improvements. However, risks include the potential for foreclosure if payments are missed, reducing home equity that may take years to rebuild, and additional costs, such as closing fees. Navigating financial recovery after bankruptcy is challenging, but by understanding your home equity options, you can take informed steps towards stability and a stronger financial future. To learn more, visit jvmlending.com for more information or to talk to a JVM mortgage expert directly about getting a home equity loan after bankruptcy.